So what would you say right now is your most interesting long idea?
Okay, so on the long side, it's that Shinoken name that I mentioned, this Japanese. But it's a Japanese small cap, so and all the disclosures, well, not all of them, but basically all the meaningful disclosures are in Japanese. So I'm happy to go through it, but what I would probably encourage is if anyone's interested, they can read up. I did a write-up on my blog, which kind of goes through the case in some detail. And they can maybe take a look at that. But look, essentially the story, I'll give you the story in a nutshell. Cut me off if it's if it's too long. But they develop apartments, a very special type of apartment, right? And that's half the business is developing apartments, right? It's a pretty typical boom-bust kind of cycle. Development profits come, development profits go. Now, 3 or 4 years ago, that was like 80% of the business. Now it's only half the business. The reason it's only half the business is because they don't just develop and build apartments, they also manage apartments. And as they've grown, the management portion of their business has grown massively, right? So every year they're adding 5,000-10,000 units. They manage them, they provide rent insurance, they rent guarantee, that is, to the tenants. They basically guarantee for a large portion of their managed buildings that occupants will pay rent. And they get a fee for that. Then they also provide electricity and gas to the apartments. They get a commission on that. Then they also provide outsourced life care services. In other words, when people age out of these apartments and want to move into a nursing home, this is big business in Japan, by the way, given the demographics, then they'll provide you, they own a few nursing homes. They also have connections with other nursing homes. They'll provide a fee. They'll get a fee rather for placing those residents in homes. Then they also bought, a few years ago, they bought a general contractor. So essentially just a building company that builds not just their own apartments, but builds a wide variety of other people's apartments and also non-apartment work as well. So only 20% of that business comes from Shinoken internally, so 80% is external business. In other words, the stock market looked at this business a year ago when the real estate market, when this particular subset of the market they focus on, I won't go into it on the call, it's very complicated, but essentially, they focus on a very small niche. When this subsection of the market came under a lot of pressure because of stuff going on unrelated to Shinoken, but to other companies that were kind of behaving badly. The stock market looked at this a year ago, and they only looked at the real estate development business and thought it was a boom-bust business, potentially going to the wall or getting close to being distressed because of external circumstances. When in reality, half the business is recurring revenue, much more like a REIT type management type revenue stream, which is deserving of a much higher multiple. So that happened last year, carried over into this year. I initiated a position earlier this year around 750, 800, at which point I thought it was trading, under 4 times earnings with pretty modest leverage by historical standards. 4 times cash earnings. They were buying back a little bit of stock, highly incented management. Management owns 35% of the business. And I was also making a bit of a call on the market recovering, right, for various reasons, which I go into on my blog. Fast forward to today, they've put up 2 solid quarters. The market appears to have stabilized in the development segment. The management segment is still going gangbusters. Margins are increasing with scale. And now, as I said, management revenues, or let's call it non-development revenues, are half the EBIT. So it's starting to look more and more like a high-quality business, even though it is still a small cap, right? So the stock has re-rated from 4 times earnings to 7 times earnings. But obviously, I still think there's a lot of low-hanging fruit. There's a lot of meat on the bone still, given listed REITs in Japan trade above 15 times earnings, right? So to the extent they can gravitate towards that multiple over time, and I think also the development segment will start to recover from next year. It's not a stretch to see this business trading at a low teens multiple.
Interesting.
Which would imply, almost another double from here, right?
Right.